Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everybody, looking at SPY on the daily and weekly time frame. So a pretty contained day, pretty low volume, and we had a higher low and a lower high. So we do have an inside bar candlestick to be looking at heading into tomorrow. We are on the verge of an all-time high. We need to be weary that we have a lower high by 16 cents. There's a gap to fill to the downside at 218.10 if we do continue to consolidate. And then, of course, the middle Bollinger Band, which was so key last week, is going to continue being key as we look for the bulls to see a new all-time high and a bullish MACD cross. If we lose the upper Bollinger Band, or the middle Bollinger Band, I should say, we know to be looking to the downside. But as of right now, the bulls are still in control. The weekly time frame was an inside bar last week, and it's currently an inside bar this week as well. Obviously just one trading day, but it shows us the range is continuing to tighten, and as long as we don't see closes near the low, which again has hardly happened in 2017, and as long as we see normal healthy consolidation, which today certainly falls under that category, the bulls remain in control and are just biding their time until they are ready to make a test of that all-time high again. So on the 5-minute time frame, the bulls saw some significant weakness pre-market. We bounced, and then the uptrend continued to play out for the first 45 minutes of trading today with higher lows and higher highs. That higher low pattern broke right here on this candlestick where we had the low of previous consolidation was 229.03, and then we broke that. So there's your red flag right there on that candlestick to heads up. The bears might be coming in here now that we broke the higher low pattern. From there, we saw a lower high and lower low, and that was the signal that the bears were coming in. So we did see a little bit of a bounce at the end of the day. Again, the pattern at the end of the day, pretty much all of 2017, the final hour, the bulls are buying. And it's the algorithms, it's whatever it is, it's a pattern, recognizable at this point, and it keeps following through. And that's why we don't see closes at the low of the day. That's why we see lower wicks on every single daily candlestick, except for one, maybe two in 2017. It's because of this end of day action where the bulls recover. So the low of the day very often comes between noon and 2 p.m. Eastern, and then we see that upside at the end of the day. So on the hourly time frame, we're floating in space a little bit. We've got the 20-period resistance up in the low 229s, and we've got the 100 and 200-period support just below 228. So not a ton of moving average levels to be looking at on the hourly time frame, and I'm more concerned with the daily time frame, watching the middle Bollinger Band, watching that gap, and watching that all-time high. So we'll check back in tomorrow and see how it continues to play out, and we'll be watching today's range for a break on some indication on where to be looking tomorrow. And I would not be surprised to see an increase in volume. Not sure if it was the Super Bowl or what, but volume was non-existent today. So I appreciate you watching. We'll see you tomorrow. Have a great night.